Hi, I'm your host Satwant, and welcome to this episode with Jordan Wright from Atomic Financial. If you'd prefer to listen to this episode on your podcast app, simply visit thepayments.show in your web browser and you'll get a list of all the episodes and links to Apple and Spotify. If you would like a PDF transcript of the episode, please visit thepaymentsshow.substack.com where you'll be able to download it. Thanks and enjoy the episode. Jordan, welcome to the Payment Show.
Thanks for having me, Sat. Excited to be here.
You're joining from Utah, I believe. Is that right?
Yep, Salt Lake City.
I watched a movie a couple of years ago, The World's Fastest Indian. I believe that's set out there on the motorbikes.
Yes, that's right. Yeah, on the Salt Flats.
I'll have to get there one day if I can afford a fast car.
Yeah, just get one on Turo next time you come out. Get a nicer car on Turo, take it out to the flats.
They're still going? I wasn't too sure if they're still going because it's a great platform, isn't it, to hire cars?
It is a great platform. Yeah, they are still going. Yep.
Okay, good stuff. Well, I'm going to give you a quick intro, Jordan, and then we'll kick off into the podcast. So you're the CEO and co-founder of Atomic Financial, and your business does quite a few things, but the one I'm quite heavily biased on today is the fact that you've recently launched a solution called PayLink, which offers businesses the ability to offer recurring bill payments, subscription payments, and updating those payment methods. And I want to start off with some stats. So as you mentioned, you're headquartered in Salt Lake City in Utah. You serve 5 of the top 10 financial institutions in the US. And 13...
That is correct, Sat, with one adjustment, actually. We just got one more this last week, so now we get to say 6. So since that was sent to you, it's exciting.
Congratulations.
But yeah, 6 of the top 10.
Excellent. Well done. And 13, you serve 13 of the industry's largest digital-first neobanks as well.
Yeah.
There's quite a bit that you offer to various institutions. So I'd love for you to give a bit of a high-level overview of the company and maybe where the company's come from in terms of its origin story as well.
Yeah, so our goal is to champion upward financial mobility for all. We think that financial services is one of the best places to do that, as I think toward the future and towards other sorts of, you got healthcare, you got lots of other places where I think you can help with financial upward mobility. We've chosen to focus on fintech. We do that in basically 3 different ways. And I'm a big fan of this concept of are you a mercenary in terms of your desire to succeed, but also a missionary in terms of your desire to do good in the world. And we want to have a business model that is compelling enough that doing good enables us to make money and do good perpetually moving forward. So I would say that's a key to why we've built what we've built. But that comes down to helping our customers lead on primacy. And for us, that means we're helping a consumer move over their paycheck. So if I open a new checking account, we can move over that direct deposit from going to your old bank to your new bank. So that is going to help our financial institutions that are looking for primacy, but also helps the consumer be able to move more easily. And the second piece of leading on primacy for them is also switching over their payments. You alluded to PayLink earlier, making it easy for them to switch over. If I've got my monthly recurring payments of, my mortgage all the way down to my Netflix bill, how do I move those when I move over my account? And we're supporting moving that over. That's the first pillar for Atomic. The second is we have a focus on powering the initiative of the consumer. So if the consumer has an initiative, has initiative to do something positive for their finances, let's say cancel a bill, we want to go be the action layer for that. For a lot of financial services, personal financial management, PFM tools a lot of people thought they'd be the answer for personal financial management in the last decade. But really, it just tells somebody, hey, sorry, you're poor right now. That stinks, right? And instead, we want the financial institution to then be able to say, right now is a tough time for you. Here's 3 things you can do to make your financial life better. We can cancel this bill. We can move the bill payment on this other payment to be able to allow you to get through to your next paycheck. And then the third is expanding access. And so we look at expanding access and we say, how do we give somebody the ability to connect into all kinds of different services? And so those are the 3 main pillars that we're using to help champion financial upward mobility for everyone.
That's quite a unique approach. I mean, I've had several guests on the show which are doing non-profit stuff, etc., which is all great. But that's a very unique angle that you've got those 3 pillars. So it's really good to hear.
Thank you, Sat.
I'm guessing, did you come from that? You're a co-founder as well. So did you come from a world where you were working in non-profits or charities, or you just saw a lot of pain in a private organization and you decided to do something about it?
Yeah, I think I come from a world, frankly, from a religious standpoint, that I believe I have to do good in the world in addition to doing my work. And so that's really what compels me. The example of Jesus Christ compels me, Sat. But more broadly, my background, I started a company before. That company was sold to Q2 in 2017, January 2017. And we saw that first one wasn't the mission-driven sort of company. It was just, hey, let's find a consumer problem and solve it. This one was definitely more purposeful from the get-go. We actually, when we sold to Q2, I saw Q2 as a mission-driven organization. I was inspired by their founder and some of the things he'd done. And thought, I think it's noble to make a good living for one's family. I think it's noble to manage people. I think it's noble to do a lot of those things. I think it's even better if I can do that while making the world a better place. And so that was kind of the inspiration for this one.
It's kind of crazy you mentioned this. Literally 2 days ago, I watched a documentary with a guy called Bill Robbins. Do you know? It's called Love Over Money. Have you heard of this?
No, I have not.
So Baskin and Robbins, the ice cream company, for those listening that don't know, it's a huge US ice cream chain.
Correct.
And his father became a billionaire. And his son, Bill Robbins, who was interviewed on this documentary, he was saying how he basically told his father when he was in his 20s that, I don't want to inherit anything from you. I don't want to take over the company. He just gave it all up. And they didn't talk for years because he was all about making as much money as possible. But with Bill, he felt very lonely and the money thing just wasn't important to him. As a child, he just wanted to spend more time with his dad. And he was always busy building the business. So it's kind of crazy that you mentioned this and it's gone full circle. So thanks for that.
I've taken note of that. I'll have to watch that one. I'm inspired by people that are able to do it with that. Yeah, in your 20s is a unique time to be able to identify that. So good on him.
Yeah, absolutely. I want to talk about this solution that you offer, the 4 key areas you address. So the first one is financial institutions. So you actually allow for banks and credit unions to embed your solution within their app so that it can increase the speed of account opening and utilization. You offer it to neobanks and fintechs, as we briefly mentioned at the start.
Yeah.
You offer your solution to credit card issuers, but also on top of all that, you partner with different companies where you allow them to resell your solution to implement it in many different ways.
That's correct, Sat. Yeah, if you look at the ways we are implemented, we're a B2B2C company. And so it's interesting that we're always creating consumer products, even though those we're selling those B2B. And so we will sell into Chime as an example, and PayPal as another example, or Bank of America or US Bank, or those different groups. And when we do that, we're having to try to keep the consumer in mind, even though the buyer is the corporate entity themselves. And so one of the questions that we have asked ourselves again and again and again in the last couple of years is, in the last decade, we've seen an increase in the competitiveness of consumer banking, and a lot of that due to the rise of somebody like a Chime, and a lot of these that have come, these challenger neobanks, these fintechs that have come and brought a better experience to consumer banking. Well, with 1033 and a lot of the changes happening there, we're fairly confident that in the United States, in the next 5 to 7 years, that competition, the rate of competition is going to increase. That's obviously better for all of us as consumers. That competition continues to increase for our business. But we see an opportunity there, and the opportunity that comes from this question that we've asked, which is, how do I, as a bank, actually help my customers be better with their money? For the longest time, banks have kept our money safe. They've maybe paid us a little bit of interest, but I would argue that none of them actually helped us be better with our money. And even these PFM tools have maybe taken us a quarter of a step there, but they actually haven't helped us be better with our money.
And they're very manual.
Yeah, exactly, right? And as I've interviewed people in this process, as an example, I interviewed one of our employees that makes around $75,000 a year, and this person tells me I have a $1,200 savings a year sitting in my cell phone bill if I just change providers, and I don't care which provider I have. And I'm over here going, gosh, why not make that change? And almost pained look on my face. And she says, it's just because I'm lazy, right? And we're all tempted to be a little look down our nose at that kind of a person. Well, then I look at my own finances and I go, gosh, I've got $3,000 a year that I could optimize a little bit better that I haven't optimized. So I think that all of us, there's that laziness aspect, there's that difficulty aspect, right? Where if And in this world that we live in today, this AI agent model, which maybe we can dive a little bit more into later, Sat, but the idea that I can have an AI agent always trying to pursue my best interests. What if that lived within my bank? That, that's kind of counterintuitive because most people don't believe banks exist for their self-interest, right? For the consumer self-interest. But if I had an AI agent that was constantly monitoring my transactions saying, you're paying 30% more on your mobile plan than other people like you. Would you like us to shop for another plan for you and actually take action if there's a savings of greater than $20 a month? Or the same thing on your auto insurance. Or another example is this last spring, Peacock bought rights to an NFL playoff game. And so you had to sign up for Peacock if you wanted to watch this game. And I think the game was on a Saturday or Sunday. What if my bank came to me on Monday and saw that I'd signed up for Peacock in my transactions and said to me, consumer, would you like us to pause your subscription to Peacock so that we hope you enjoyed the game and all that sort of stuff, but let's pause your subscription to Peacock until the next major sporting event. Would you like us to do that for you, right? And that's really the world. That's the world I want to live in as a consumer. That's the world I want for my kids, is where, like those, I saw an article in the Wall Street Journal recently where this person was able to buy a Tesla with the savings from canceling all of his subscriptions he wasn't using. It was literally to the tune of $400 or $500 a month, right? And he was able to afford a payment on a Tesla with that savings. And so that's very exciting to me that we get to build a solution that all of us want to exist in the world that doesn't yet.
I saw elements of what you've been talking about in the past, especially in the UK, where bank accounts were launched in the 2010s with a sweep function where basically your savings in your checking account would work so that you could set, say, checking account to have $1,000 in there at all times. And every time it dipped below, it will sweep it from your savings back into your checking account. And that was kind of all the rage for a bit. And some other banks started doing it, and then it kind of all went quiet, really. So it's great to see that you're really putting a lot of emphasis into not just doing that, but even more. I mean, the kind of things you're talking about are, would be fantastic to see them live and actually working. I mean, how is that going in terms of, I don't know how big your company is and what kind of impact you're making.
Yeah. So, we've raised $68 million to date for our company. We work with, if you consider our reach, by the end of this year, we should have access to over 100 million Americans through our customers, which is very, very exciting. We spoke about it briefly, but 6 of the top 10 banks means, just to put that in more clear wording, Bank of America, Citi, U.S. Bank, Truist, Capital One, PNC, right? In addition, and stepping into the next tranche of 10, right? You have Fifth Third, Ally, right? So these sorts of companies give us this incredible reach that is so exciting for our team. Like that's one thing that, we need to get probably into the heart of payments on this a little bit more, but our team just loves the fact that their friends and family, our SDK sits on all their friends and family's phones. Almost certainly. We work with PayPal. So if you have Venmo and those sorts of things, it's going to be on their phone. So there are so many things there that we get to build products that all of our friends and family and loved ones will end up using in the future, which is just super incentivizing to me.
Yeah, fantastic. You obviously mainly in the US, I guess, in terms of the markets that you serve.
Yeah, US and Canada right now.
Yeah. And what kind of customers, what industries are you serving so far? Maybe you can talk about some case studies perhaps.
Yeah, a couple of examples. So when you look at the movement experience with 1033 specifically, Director Chopra has oftentimes talked about in the United States, the experience of moving between banks should be akin to cellular connectivity and moving my cell phone from portability of cell phones, which in the United States took a while to happen. I'm not sure about Europe and England. But when we think about that, payments should operate the same way. And so like one example, that a solution that we built gives consumers the ability so that, and it can be resold, right? So that they can go in and they can identify what is the top of wallet card being utilized at all my major payment mechanisms. And so this could be my Venmo account, this could be Amazon, this could be all those sorts of, my Apple Wallet, right? All those sorts of places. We say, what is the major place that my payment methods are being utilized? And then where can I go and update those immediately upon loss of a card and getting a new card, or upon getting a new checking account and banking relationship entirely. So that's the first use case that I would say is, directly in this payments piece. we have customers launching that right now. We've been live with our customers for over 4 years on updating where your direct deposit gets sent. That sort of functionality is going to revolutionize the payments ecosystem and landscape, because I'm bullish on the fact that there will be less difficulty obtaining payment from consumers in a lot of cases where it's easily updatable, right? But I'm also bullish on the consumer side that you're saying, oh, I actually don't want to update that one anymore. And so I'm going to leave that one off of my list and just let it cancel out due to non-payment, right? And so now at the same time, these consumers have made agreements sometimes with companies. Netflix, you can cancel at any time, but some of these are longer term agreements, like a gym membership that we've seen so many comedy sketches for, that you basically have to go in and sign away your life to be able to get out of that membership. But I'm hopeful that this will decrease stickiness generally of those sorts of mechanisms. It's obviously bad for some merchants, but for those that give the best service, it's going to be the best for them.
Yeah, agreed. Yeah, the gym one, there was a sketch in Friends a long time ago where he goes in January to cancel and and there's a highly attractive person at the desk. I mean, obviously it's a funny scene, but
yep,
I'm sure that's repeated every January all over the world, I think.
It really is. And it's too funny. But yes, that is correct.
Yeah. Okay. I wanted to address some topical things at the moment as well. And maybe if any of these affect your solution or your solution addresses, feel free to talk about them. So one of the big ones is app fatigue. More and more people are deleting more apps than they're installing. I've read many consumer reports about that. The buy now, pay later world is consolidating, and some companies have even closed. And obviously fraud and security are a big problem. So I don't know whether there's any of those that you wanted to address that maybe link into your solution.
Yeah, one of them around the deletion of apps as an example. And I agree with that. And I've done it personally, right? You just find, gosh, I'm scrolling through 4 pages of apps, but I'm only ever on page number 1 and the last page, it feels like, of my apps. And so I do think that there's definitely fatigue there. Our viewpoint is that the financial services application, your bank's app, your fintech's app, right? That should be the hub of financial services from you. You should not have to leave that hub in order to engage with Netflix. You shouldn't have to leave that hub in order to engage with Amazon. You shouldn't have to leave that hub to be able to engage with any of the services that you pay via that channel. And I think that is an exciting place for us, is if we can allow consumers the ability to engage with that entity without having to go leave the financial services app and go into there. That's huge for many reasons. One is for primacy. For the financial institution, that means they're getting the consumer in more often and with more intent, right? I'm coming in with the intent of checking on my financials, on my transactions, and optimizing them and trying to fix something, right? Versus a lot of times today, they come in with the intent of learning, and then they'll go to a spreadsheet or something like that to be able to figure out how their financial life needs to be optimized, and then they'll go take action somewhere else. But if we can bring the action element into the financial services app itself, it's kind of going down the route of these super app concepts that people have been talking about, right? But we're giving them the ability, and my co-founder talks about this better than I do, where they're in mission control for their entire financial life when they're inside of their financial app. And mission control means I can control how things are happening in all these various windows that I have up in front of me, right? So to speak. And I think that there's a future where we see that, where a consumer can come in and they can see, oh, I can pause or cancel this subscription right inside of this transaction, inside of my transaction, inside of my bank or fintech app, right? Or I can have all of my transactions imported from my financial services app, and now I can have an app that helps me monitor all these relationships at one point in time and is actively working on my behalf to be able to help. And so I would say that's a key for me, Sat, that I'm very excited about, that ability to reach into all those other aspects. And I think your third point was from a fraud risk standpoint, right? That also comes in there, because one of the things we've done is we've created an OAuth-like experience we refer to as true auth when I'm connecting to those other apps, that if we were to do this a decade ago, the technology didn't exist. We would have needed to collect a username and password from the consumer and go log in on their behalf. Well, now we have the ability to do an OAuth-like connection with almost all of these merchants. And that OAuth-like connection makes it so that it's far more secure than it would have been a decade ago for the consumer to be able to do this. And there's this exchange that happens, right? We go to a consumer and we say, or the consumer comes to us and says, I'd like you to switch a payment. I'd like you to cancel a bill for me. I'd like you to do this. And we say, okay, in order to do that, we're going to need some pieces of data from you, or we're going to need you to do something. And once you take that first step, we can go do everything else for you. Ideally, sometimes there's going to be a few other things required. But so that one of those might be, we're going to pull up a browser, you're going to log into Amazon, right? And then we're going to go take care of that thing for you. And so there's a lot of things like that we're very excited about that give the consumer, so it should help reduce fraud risk as well, because now we're not getting the credentials, but we're helping that consumer act on their behalf. And so there's going to be a lot more trust, I hope, in the system. But also going back to the first point, they're going to be able to reach into all those services from a single financial services app.
Yeah. How rich is your subscription solution that you've been talking about, for example, in terms of what's been implemented to date so far? Or has it literally just been launched?
Yeah, it's a great question. So the payment switching technology is recently launched. It's being used by several customers today. A bunch of consumers today, I should say, a bunch of beta testing going on with it. We have customers going live with it in the next 30 days or so. The subscription management piece is more technology that's built already for 5 to 10 merchants, call it, and will go general availability later this year. And so but it's built off the same rails as our payment switching technology. And so all of those rails are already built out. Now we're expanding within each one of these merchants to be able to expand our reach of functionality within each of them. So at a Netflix, we can switch payments today, no problem. We can actually, that's one of the merchants, we can also do the subscription management pieces, so we can cancel a subscription. One of the things that people don't think about is also the optimization of payments. And so think about, in the United States, it's very common for people to get paid twice a month, but you don't think about that when you sign up for Netflix, right? You just sign up on the 7th, or you sign up on the 30th, right? Or whatever date it is, and that's when your billing state starts. And almost all of these major merchants have given the ability for you to modify when payments are due in a given month. You obviously can't skip months, but I've thought about what would be the impact if all of us were to go and optimize our payments to come out just after the day we're paid. So if I get paid on the 1st and 15th, if all my bill payments come out on the 2nd and 16th, then is that going to help me live more responsibly within this 2-week pay period? And some people argue we shouldn't have the 2-week pay period. It was good for me when I was younger to have to learn to live off of 2 weeks worth of money and not have to be paid every day. I think I have some battling feelings. Do I love earned wage access companies? Yes, I do. I think they're critical for the ecosystem because occasionally there are emergency circumstances in between there. But I really do think that is something from my perspective, Sat, that is very net positive for this use case of connecting to these merchants. If we were just to align all your payments around when you get paid and not have it be like, oh gosh, a $50 payment just came out and it was about to come out and I'm getting paid in 2 days and I can't afford that right now because of the other things I have going on in my life. Hopefully we can solve for some of those problems with that.
Yeah, that's great. I mean, I try to do that anyway as much as I can. Whenever I get a new credit card, I always ring up straight away and say, change the billing date so that I have to pay everything at the end of the month. And then on the first, everything's zero. And that's quite easy to do with credit card statements, but the actual billing of the things I'm paying for, it's a bit hit and miss. So my cell phone subscription and my iPad SIM card subscription are out of sync by a week and a half. And I just want them to come out on the first. And the only way for me to do that is pause it and then resume it on the first. But you try and live without a phone for maybe, 22 days.
Yeah.
Or whenever I remember to pause it. It's just not going to happen.
Yep. That's right.
Yeah.
It won't happen.
There's a lot we can talk about, but I wanted to ask you really, is there anything really important that you wanted to get across in this recording that maybe I've missed, to business owners out there or somebody that's working at a large financial institution?
I think the main thing is, sometimes payments can feel like this. It's the infrastructure oftentimes of financial services, right? We sit maybe a little bit more at the cutting edge of the customer experience since they actually see us on a regular basis. But payments is such a crucial part of infrastructure that we all rely on every day sometimes it can be overlooked in terms of, I was looking at a comment that Wade Arnold from Move made recently, and he said that early on they had some struggles with availability of their services or something like that, right? And he said he talked to Mark Andreessen or Ben Horowitz about it, and they were like, this is not the sort of game where you can have any issues with this. Like, payments has to work all the time. Like it can never have problem. And I think about, and so they then decided to put a ton of time and energy into stability over the next 6 months. And I think it's paid off very, very well for them. But I think about that, and sometimes we lose track of the customer in the payment experience because it's so much infrastructure. And so if there's one point that I would like to make in this, is that when we start with the customer experience and work our way back from there, I think that's where the greatest innovation in payments is coming from right now, and will come from in the future. And when our model is predicated upon an educated customer that really wants our service because we've created something very, very, very compelling for them, that's when our companies are going to win big. And so I think that just every time I think I know something, I interview an Uber driver or I interview somebody somewhere, and I learn something new about the financial services ecosystem, about how people view it. Like one example of this, most affluent people in the United States put a card on file. It's called going direct to a bill or direct, for their payments. But most people in the United States don't fall in that affluent category. So a lot of people actually, what they end up doing is they don't put a card on file, and they just log in once a month to that service. Now, you can't do this on Netflix, but for your utility provider, you can, and a lot of bigger payments and auto insurance, right? And they just make the payment. And it works very similar to what you described. In fact, one of our customers has the ability for their customer to stop payment on their checking account, on their debit card. And they basically have people use that as a way to control their finances. So they'll pause payment for 3 days to get through to a critical time period. And so, the financial divide is increasing in our country, but also inflation, other sorts of things are making it is just becoming increasingly difficult to meet your bills and meet your finances. And so solutions that I think are helping people bridge that gap. To a business owner, I would say, gosh, I know business owners that allow people to skip a payment and add another payment on the back side from if they had a loan from them, right? I think those sorts of services are going to come in more handy for the consumers, and are going to win over a consumer in the long run. But those are a couple of thoughts, Sat.
Yeah, thanks for that. I totally agree that the divide between people on higher incomes and lower incomes is just getting bigger, and central banks are certainly not helping things. But that's another conversation, maybe for another podcast.
Yeah.
So if anyone is looking to potentially have a discussion with you guys about implementing your solution, your website is atomic.financial. What does the engagement process look like? And are there any conferences or things like that coming up which you're going to be attending where people can meet you?
Yeah, I just actually spoke at American Banker with US Bank a couple of days ago in Boca Raton, Florida. I'm at Money 2020 every year. I go to a lot of the other major conferences. So there's a bunch of conferences this fall on the fintech side and financial services side that I'll be at. American Banker Live, or Money Live, excuse me, is that one. So yeah, we're at a lot of those conferences. If you fill out a form on our website, our team would get in contact with you immediately. You're also welcome to reach out to me directly on LinkedIn. Happy to chat.
Great stuff. And I think to finish, I'd love to talk about something about the future. Have you got any predictions or any comments you want to make about what's coming up in the payments world in the next sort of 6 to 12 months?
I'm very excited about real-time payments in the United States. At the same time, and I think it'll continue to accelerate in the United States. A friend of mine who is a Brit, Simon Taylor, made the comment to me recently that he gets to live, he's the ghost of Christmas future. He gets to live in that future time period. And so I am also, while I'm excited about real-time payments and I'm excited about some of these things that it will offer for us as consumers, I'm also very worried about fraud increases. And I think that is almost a given. People, in fact, I saw a post on LinkedIn just the other day that said, like Brazil has implemented this PIX or peak or something like that, this real-time payment mechanism all over Brazil, and they rolled it out in just a few years. Like, what's our problem in the United States? I'm like, yeah, they have like 5 banks, we have literally thousands in the United States, and it can't be rolled out. Our financial, and some people are saying that might be an excuse for us not doing stuff, but I actually think it's just a fact of life. And so I think it's good that it's taken us a while to get here, and I think it will actually be good for us to go slowly at this. But I'm excited about real-time payments. I'm excited what that'll do for consumers in terms of payouts for Uber drivers and stuff like that, and some of that's already there via card rails. But anyway, I'm very excited about that aspect of the future. In terms of other predictions, I also believe that within a few years, banks will be delivering to their customers as part of their monthly statement how much savings they gave to a customer, and more health quality metrics than just interest rate. And that's a prediction I'd have for, I bet 3 years from now, you'll have a health quality statement on your statement instead of just a savings or an interest payment you were made.
Yeah, that would be really good to see. To be honest, I don't even get the interest rate on most of my bank statements. You have to really dig for it.
Yeah, that's right. That's because they're embarrassed about it.
Even if they did that would be a good thing. Yeah, I read, It was quite funny reading this year, especially in certain personal finance websites and things, where some of the older journalists have said, oh, my daughter or my son, they have never received interest and they're just seeing money on their statements that are coming in, and they just never seen that. And you forget that, okay, people in there, who are just 18 now, they've never seen higher than 0% interest.
That's right.
Cool. Great stuff.
It's crazy.
Well, thanks so much, Jordan. Really appreciate your time. Once again, if anybody wants to get in touch with you guys, I'll put the info in the show notes, but your website is atomic.financial. So thanks, and all the best to you and your team.
Thank you. Appreciate it, Sat.
Cheers.
Cheers.